The market's been closed for a couple of hours. It is Wednesday, March 10th, and that must mean that it's time for the weekly swing trading video. Hello, traders. A week ago, we had a bit of a rough patch. We had the market selling off, major moving averages broken, technical support broken. We had to buy in some of our positions. We took some losses. Now we have a clean slate. We've got a few positions on. They're doing well. Those positions were left on because I felt they had a chance to do fairly well even if the market pulled back. So we're going to take a look at those. Going to do some market analysis. I do have a couple of trades that we'll try and put on, but in general, we're going to be very passive right now. We're going to let some of this volatility come out of the market. The stimulus bill was passed today by the House. President Biden is going to have the stimulus bill on his desk to sign. Hopefully, within a week or so, people will start getting those stimulus checks. Now, back a couple of months ago, I thought, hey, when this stimulus bill goes through, Democrats control Congress, they control the White House. This is going to be something special. And when I saw this rebound here, I thought this bill is a slam dunk. It'll get pushed through and we'll have a chance for a buying climax. Didn't happen. We were positioned for it, but it didn't happen. Now, we did have some call positions out there. We took a hit on our call positions and we were exposed to the tech sector. That was the sector that I thought would lead the charge because it's been leading the market the whole way. In fact, tech stocks started to pull back because interest rates were rising. Now, as the market came in, we saw these long red candles. We haven't seen two of them in a row in quite some time. And you can see that dating all the way back to last fall, bears just can't get anything organized. So there's been a good bid to the market, but here we go. Two red candles, a little bounce. Now we get three red candles in a row, and we're testing those major moving averages with greater frequency. That tells me that the selling pressure is building, and you can see this was taking place on bigger volume. To give you an idea of the average true range that we've been battling, the average true range for the S&P 500 back here was about 30 points. Here, it was about 90 points per day. So very, very crazy trading. We'll put up the QQQ so that you can see how it has declined much more than the S&P 500. Now that is some heavy selling. Yes, we do have a reprieve at the 100-day moving average right now. However, I'm not convinced that this is the bottom. Typically, when you come down and test major moving averages like this, you're going to have a little bit of a bottoming process. Here we came back and checked the 100-day moving average, and we were off to the races on the QQQ. We're not seeing that type of liftoff. Look, you had big gap here, another big gap the next day. You pull back a little, and then you're gone. Today, we're instantly checking the bid. QQQ opens on the high, and we had a gap reversal. QQQ closed almost on its low of the day. Now, I know everyone's excited. My God, these tech stocks are so fantastic. Are we ever going to have a chance to get back in? We need to take a deep breath. You can see that the character of this bounce could change very quickly. Draw an upward sloping trend line visually here. That's your flagpole. That's your upward sloping trend line. If that's breached, whoosh, that is a bear flag just like that. So I know that this seems like a really good opportunity for us to load up on tech stocks. I'm not seeing the strength in the TLT. You can see how bonds have sold off. We had this major breakdown below technical support. We had what looked like a capitulation low. Market came in and look, we're testing that low. We are not bouncing off of it. When you have a capitulation low, it goes something like this. You make that low, you bounce, and then you are off to the races. We're not seeing anything close to that. The other thing that we really need to do is let's put our market into context. I wrote in my morning comments today that China is officially in correction territory. And if we look at the FXI, that's the Chinese index, look, it closed today below the 100-day moving average. That is a 15% drop from the high. China's economy has been open much longer than our economy, so they have a real head start on us. But look at what their market's done. It's pulled back. So for us to just take a look at what's happening in the United States, the coronavirus cases are decreasing. We got this massive stimulus bill. The jobs number last week was pretty good. We have the Fed with its foot on the gas pedal. Hey, doesn't get any better, right? Not so fast. We've got to keep everything in context. And right now, global markets are not off to the races. So I am not worried that this is our last and final chance to get long the market and to take nice positions. We have been so active in our swing trading account. I haven't even been this active all of last year. This is not how this account is designed to trade. Ideally, we put the positions on, we pick good stocks, we distance ourselves from the action, we got a sideways market, time premium decay takes care of the rest, position expires, and we keep rolling the positions along. That's not what we have right here. We need to be very careful that the market is not going to stage another leg lower. If it does, all of our bullish put spreads are going to be in trouble, and we don't want to be getting back into that situation. I'm not sticking my head back in that noose. We just got done closing out some of our positions. So that's where I stand on the market right now. As always, if something changes dramatically through the course of the week and I see an opportunity that we need to jump on, I'm going to send you an email before the open and we'll take advantage of that opportunity. I'm not compelled to do anything like that right now. We're going to take a week or two, let the dust settle. Who knows what the ultimate reaction will be to the stimulus bill? That news is priced into the market right now. Is it a sell the news event? We'll find out. So let's take a look at some of the trades that we had to exit last week. I'm going to go into the staged order entry screen and we'll be able to take a look at some of them. And we had to get out of Penn, we had to get out of PayPal, we had to get out of QS, we had to get out of TSM. So let's take a look at those stocks and see how they fared. TSM, we were long calls right up in here. We had this nice breakout that we bought, expecting the market to move higher. Semiconductors are in huge shortage right now. So they're going to be super, super busy for a very long time. But you can see how TSM sold off with the market. We had to get out of this position. We also exited Apple a couple of weeks ago. Good move. You can see how it continued to break down. We also had PayPal. The bottom absolutely fell out of this stock. And we were short a bullish put spread in here, leaning on that 50-day moving average. Good thing we got out. PENN, that one I kind of grappled with for a while. I knew that the stock was super volatile and that it has its online sports gambling. So the stock valuation is relatively high. I felt like if they started to go after high PEs that this stock could be vulnerable. It was. It went all the way down to $95. We were short the 105 100 bullish put spread. Of course, now if you take a look at it, you go, ha, we should have stayed in that one. Yes, we could have stayed in that one. Penn actually looks pretty decent. We've got the NCAA tournament coming up. I think that's keeping buyers engaged. DKNG is also another one, DraftKings, that we have been trading during the day in the chat room. That also looks pretty good. QS, we had a big drop in that, and we were leaning on this 100-day moving average. Intraday, the stock had gone down to $35, and I've got to tell you, we were short the $40 put, long the 35s. I was happy to be out of this trade a week ago, or not a week ago, Friday, we were out of that trade. So actually, we closed all of our trades Thursday, right after the Wednesday night video. So by the close Thursday, I was happy we were out. And by the opening Friday, I was really happy we were on the sidelines with all these positions. Not that they were bad stocks, they were okay. They were not a problem. It was the market that was giving us a headache. Now, I also last Wednesday had mentioned two really nice short positions that I liked. One of them was Qualcomm. And you can see that that stock after last Wednesday night really dropped hard and it came all the way down to this 200-day moving average. So for those of you who are more nimble in your swing trading, that was a nice trade. Roku also dropped, and that was before the NASDAQ bounce that we had this week. You can see that was also a very nice short for a couple days. I had mentioned to you, you need to be in, you need to take profits. We don't want to be shorting a market that's in a 12-year bull market and a 12-month bull market. The only time we would do that is if we have a technical breakdown that's lasting for a long time. And I'm talking about the market closing below the 100-day moving average many days in a row. Okay, now we've got a problem. Now the market has changed its colors and the downward trend may be established. So the good news, currently we're down 15% in the model account. I know that we're going to be able to make that back. How can I say that with such confidence? I know that when you're able to dodge bullets like this and go to the sidelines, that these pullbacks present a fantastic opportunity because you're able to evaluate stocks, you're able to evaluate the market with a lot of clarity, and our next opportunities are going to set us up very nicely. So let's take a look at our current positions. BA, we are short an out of the money bullish put spread all the way down here. So we are short, I believe, the 205, 202.50. Not even an issue. Look at how strong that stock is. These expire a week from Friday. So we're in great shape there. We'll end up making our 25% return on that. We also are short a Mara bullish put spread. And we are short right here, the 25, 22.50 bullish put spread. Stock is at $38 in great shape. Last week I had mentioned to you that I was very impressed with Mara and how well it had held up during the tech decline. It is a tech stock, and you can see it barely even pulled back. And then as soon as the tech stock started to catch a bid, it was off to the races. I showed you earlier the QQQ bar for today, and you saw a gap reversal with the QQQ closing on its low today. Look what Mara did. It pulled back a little bit all day, but it closed higher than the prior day's close. That is relative strength in the tech sector. If you're looking for a tech stock that looks really good right now, Mara is an excellent one. So they've got earnings next week. That's why we are not going to be taking a position. Otherwise, I probably would have looked to sell an April bullish put spread, feeling that our March bullish put spread was going to be expiring. I would have wanted to get ahead of the curve. I'm looking for plays right now where we don't have to do a lot of adjustment that really look attractive to us. And I do have a couple of trades for you tonight. I could go through and I could click through a bunch of searches. I've been doing a lot of that on a daily basis. You know what some of my favorite searches are. And if you go into Pop Bull, that is one of my favorite bullish swing trading searches. I also like the new search called Bullish Flag. These are some nice candidates. Let's just click through a few of these charts. You're looking for these bullish flags, draw your downward sloping trend line. You can see the breakouts. I'm not real big on this one. I'm going to keep clicking. This one I do like. This is CLNE. You can see that downward sloping trend line right there. Earnings after the close yesterday. Really nice reaction today above this downward sloping trend line and above the 50-day moving average. But I looked at their revenues. I wasn't overly impressed with their revenues. Yes, trucking is going to come back. I mean, you could sell an out of the money bullish put spread on this stock. You can see how far it's run recently. This was a $2 stock. So to think that it's somehow cheap at $13 when 6 months ago it was at 2, probably not. So I'm not going to take a lot of risk here. I'm really looking for high probability plays right now. My preference is to stay on the sideline, but I do have a couple of stocks that I like. So I'm going to show you one of them. is AMAT. AMAT is a tech stock, and this chip shortage is for real. And you can see, yes, AMAT's had a nice run in here. You've got this horizontal breakout right here. The stock held up extremely well during the tech sell-off. And you can see how it went from $124 down to $112. On a percentage basis, it held strong. It held the 50-day moving average. It held this support line right here. I want to sell an out-of-the-money bullish put spread. Am I going to be selling it right where we are right now? No, I want to give myself time and I want to give myself room. If I look at this, I'd love to try and get down to this $100 strike price. That puts me below the 50-day moving average. It also puts me below the low when the NASDAQ was selling off and fell down to the 100-day moving average. So again, let's just compare. Let's take a look at what AMAT did, and then we can put up the QQQ. And there we'll do an overlay, and there you can see the relative strength. QQQ down hard, down to the 100-day moving average in the case of the QQQ. AMAT not even close. Beautiful. So we are going to sell an out-of-the-money bullish put spread on AMAT. And we are going to go out into the April expiration so that we can distance ourselves from the action. And we are going to sell the AMAT April normal expiration, April 16th. We are going to sell the 100 put, and we are going to buy the 97.50 put. And you already know that because I have $2.50 between the strike prices, I typically like to get a 50-cent credit for this. And I can't recall, I think I'm trying to get a 50-cent credit for this, but honestly, I would take a little bit less, and I did put in a 45-cent credit. So we're going to take just a little bit less than our normal 50-cent credit. I want to make sure that we've got a decent chance of getting filled on this. And you can see that 45 cents is pretty close between the bid ask spread, like right in the middle. So I think even tomorrow, we've got a pretty decent chance of getting filled on this spread. So let's recap it. We are going on AMAT, AMAT, April 16th expiration. We're going to be selling the 100 put, we're going to be buying the 97.50 put, and we're going to be doing this for a credit of 45 cents. Now you'll also notice that this spread puts us below the 1 standard deviation and 2 standard deviation. So here again, we've increased our probability of success even more. The second trade that I want to do is something that I had to do a little bit of research on, but it really intrigues me, and I do like the chart. The symbol is TRTN, and you can see how we've got really nice heavy volume in here. I'm going to put up the relative strength indicator, the 10SI indicator, so that you can see that it's got really nice relative strength. Still above zero right in here. Stock looks good. It had earnings here. You can see how the stock is near its high. And then today it made a new all-time high. So really nice breakout here. The reason that I like this is because it is very strong fundamentally. And I'm going to put up their recent earnings report. And you know I'm not huge on fundamentals, but I do read a lot of news items, and this one caught my attention because I was reading about a container shortage in Singapore, and prices have absolutely skyrocketed. So shippers are really wondering whether or not they want to pay these high prices or wait to ship. Merchants are really caught in a quandary right now. So the thought comes to me, who makes these containers? Well, Triton makes these containers. And here's the key line right here. The adjusted net income for the fourth quarter was $1.70 per share, an increase of almost 50 cents per share from the third quarter of 2020. Look at these guys are knocking the cover off the ball right now. The stock hasn't jumped. This is going to continue for a long time because we are going to have a lot of supply bottlenecks. So I really like this. And all of last year, the stock made $4.61 per share. So it does not have a real inflated PE ratio. I like that. So they've got fantastic macro conditions. And we're going to put up TRTN. We'll take a look at the options. Going to go out to the April 16th expiration. And we're going to come down to this $55 strike price right in here. Let me get this out of the way so we can see it clearly. That is a nice horizontal support level. And you can see that during the market decline, this stock held up really well. Sorry about that. Need to add the SPY in here. Actually, I could have just used the icon. And there you go. There's the market decline. Here's what the stock did when the market was pulling back. Market's down, stock is up, 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 and compressing. I think this stock is getting ready to make its next move higher. But we aren't going to play the upside. We're not going to buy calls on this. We are going to sell an out of the money bullish put spread. And we're going to go out to the April expiration and we are going to sell the $55 put and we're going to buy the $50 put. And I normally would want $1 for this spread because we have $5 between the strike prices, but I'm willing to take a little bit less. You can see the spread is 60 cents bid, offered at $1.25. If I can get 90 cents for this, the trade is going to span about 5 weeks or so. I'm probably going to make about 22% on this. That's a nice return, especially given the market volatility. Let's recap this trade. TRTN. April 16th expiration. We're going to sell the $55 put. We're going to be buying the $50 put, and we're doing that for a 90-cent credit. So if you do like to do fundamental analysis, you can take a closer look at TRTN. Technically, it looks great. That's all I really care about. But fundamentally, I've got another safety net, so to speak, to increase my probability of success. Now we have one more trade that we need to take a look at, and it's almost a good problem to have, and that is that Mosaic is really starting to catch a bid. It caught one today in a pretty major way, and you can see how this is one of the stocks that we held on to. I'd mentioned Boeing was great, Mara was great. This is our other position, and we are long the June $30 calls. And while I'm speaking, I'm going to bring up the Mosaic options and we'll take a look at where they closed. And we are short the March 19th $34 calls. No big deal. Those are currently 80 cents bid, offered at 98 cents. And you can see how the stock today really had a strong day. Not typical for this stock to move $2 in a day. Closed at above $33. So we still have $1 to get to that strike price. All I can tell you is if I really see MOS gaining momentum on heavy volume and it's creeping closer and closer to our $34 strike price, we may buy those options back in and just stay long our June calls. But there's a good chance that the stock is just going to waffle around as it has and grind, grind, grind. Ideally, these options, the $34 calls, expire worthless and the stock is just out of the money because that would allow us to just be long those calls. And by the way, let's take a look at where those June $30 calls are. And we are long that spread at $4.40. I think I did 3 contracts in the model account. And there you can see that those calls are $5.50 bid, offered at $5.60. So the spread hasn't moved really too much for us, but I do like it. I think this stock is one that continues to move higher for many months. That's why we are long in the money, longer term calls. That's what I've got for you this week. We've got to wait for some of this market volatility to ease. We're driving ourselves crazy with all sorts of alerts before the open, adjust this, do this, market that, try and get into this. That's not what we need to be doing. We need to wait for opportunities to set up. We need to wait for clarity. And then once we have that and everything starts to settle down, boom, 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 we'll be much more mechanical about it. But if you're contemplating whether this is a time for you to go full force in the market with the stimulus bill and everything else, I think I've given you enough reasons to reconsider that. Take a look at what's happening in global markets. Take a look at what the bonds are doing. Take a look at what tech stocks are doing. I'm not bearish. I'm just being cautious and looking at everything that's going on. Thanks so much. We'll see you tomorrow.